Interest rates cut to 0%. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from the ABC, or this analysis, discussing if the Reserve Bank will cut rates to close to zero, or pretty much zero. If we jump over to this screen, we can see this is the ASX target rate predictor, the tracker, and they track it every day. So the latest data from the 30th of October is 84%. That's the probability, or the prediction, that rates will be cut to 0.00%. Now, that would be a massive impact on the cash rate, because right now it's sitting at 0.25%. So one would have to ask the question, what's the point? Is it going to make that much of a difference? For those of us who have mortgages, sure, we may save a little bit every week or every month whenever you make your payments. But the concerning thing is it's going to juice the property sector. Those people who could only borrow so much now all of a sudden will be able to borrow more. There's the worry. So let's have a look at this analysis. The Reserve Bank may cut interest rates to very close to zero. So what does that mean for borrowers and savers? Oh, savers are just completely... I mean, the time of earning money from just sitting money in a bank account and watching it, I think that's long over. I can't see that existing. So, the Reserve Bank meets on Tuesday to decide whether or not to lower its cash rate target to 0.1 of a percentage point from 0.25 percentage points. That takes us very close to a negative interest rate. But already some interest rates in Australia are negative if you take account of inflation. Oh yeah, if you take account of inflation, you look at the rate that you're getting from your bank for your savings, you're losing money. Annual inflation, as measured by CPI, is currently 0.7 percentage points, and that doesn't take account of the true cost of housing. It's a bit funny how they measure it, but still. And as it stands, the effective overnight cash rate, that's the interest rate the Reserve Bank attempts to influence every month, and reflects the rate that banks lend to and borrow from each, is sitting at roughly 0.13 percentage points. So the value of the money banks are lending out after adjusting for inflation is falling at roughly 0.7% per annum on the current rate of inflation, while the rate of return the banks receive from that money is well below that at roughly 0.13%. The bank's money is being eroded over time, as opposed to growing, which is the effect of negative real interest rates. Economists say this means the cash rate is effectively negative right now. Will it go even lower? And it has in other jurisdictions around the world. Japan's been trying it for some time. Does it work? Or is it a trap? Is it a trap that you can never get out of again? Look at the US attempting to normalize rates. What happened there? The market says no. The RBA's monthly catch-up is called a live meeting because the bank may very well decide to lower the cash rate during its hours-long meeting on the day, as opposed to simply justifying the decision during the meeting. But all eyes will be on the accompanying statement from the Governor, Philip Lowe. If you can look away from the Melbourne Cup form guide for a moment, it will be interesting to see if he makes reference to the bank's further plans for easing monetary policy. To date, Dr. Lowe has said it's extraordinarily unlikely the bank will move the cash rate into negative territory. Then again, he was similarly unequivocal about the chances of the RBA engaging in a money printing program, and that quantitative easing program is now well established. Exactly. You can't really put much weight into their claims because they will do what they need to do or what they perceive they need to do to help the market. They're terrified. These Keynesians are terrified of recession. They're terrified of giving the market the freedom that it needs to have fair and equitable pricing and to adjust. That's why we've got such an artificially low interest rate, everyone. So, how does negative interest rate policy work? The big commercial banks have deposit accounts with the Reserve Bank to record the value of their exchange settlement balances. That's a fancy way of saying commercial banks bank with the Reserve Bank. Normally, the big banks receive a return on their accounts, which much like a regular customer would receive on their deposit accounts, only the rate is the cash rate. In making the cash rate negative, the Reserve Bank effectively charges the commercial bank for holding money with it. Most banks, the thinking goes, would shudder at the thought of paying the RBA to hold their cash overnight, so they'd make an effort to lend it out instead. That is why it's understood to be a stimulus policy, because it's thought to encourage lending. That's the theory anyway. So borrowers profit while depositors cop it. The reality is more of a highly distorted banking system, and I'd say an unnatural banking system. Banks take bank deposits and lend out. That's the basic business model. Logic would dictate that if interest rates turn upside down, then customers would be charged for their deposit accounts, and mortgagors would make money, not lose money on interest. And that's exactly right. As the National Australia Bank chief economist Alan Oster puts it, certainly if the RBA went negative, you would see fixed rates go down, and they'd all probably have a 1 in front of them, he said. As a borrower, what might happen, to use an example, is that if you have a mortgage of $1,000, by the time you then pay it back, you may just give back the bank a total of $900. As for depositors, the interest rates on most accounts would basically fall to an extremely low number. Again, adjusted for inflation, your money's better off under the mattress. Most economists say it's unlikely banks would move to charge depositors because it would lead, they say, to mass withdrawals, and that has the potential to crimp the bank's ability to lend. So, on the edge of an economic disaster. Apart from RBA Governor Lowe's obvious reluctance to employ a negative interest rate policy, Mr. Oster says if the policy were to be deployed, it would mean the economy has crashed. What would that do for economic confidence, everyone? For the general consumer's confidence? Maybe they wouldn't appreciate it. Maybe they wouldn't pay attention. So that's not hyperbole. The fear is that banks stand to lose billions under a negative interest rate scenario because the money they make on deposit pales in comparison to the billions lost on the slump in lending. Yes, borrowers stand to make money on transactions, but with less funds to draw on, the banks are constrained in how much they can lend, and the business model itself starts to collapse. But see, this is the thing, the Reserve Bank can just... So, all eyes on the cash rate. So, we're left with a game of limbo. How low will the Reserve Bank go to lowering its cash rate target? The effective cash rate is currently hovering between 8 basis points and 13 basis points, 0.13%. Because the money market has pushed the rate below the RBA's cash rate of 0.25%. But the effective cash rate, the rate which influences your mortgage, could easily fall very close to zero. And from there, the banks will be trying its best to lower long-term interest rates. You can see why the RBA governor has tried to shift the focus to what the federal government can do in recent years. Dr. Lowe is painfully aware of the potential limitations of the bank's arsenal, and they have reached the limit of what they can do. They really have reached the limit of what they can do. There's only so much intervention. How much impact is it going to have if we hit negative rates? What do you reckon? I mean, are savers even getting anything? Do you even notice what you're getting on your mortgage? Sorry, on your savings, everyone? The only reason I'm getting anything is because I've got an offset account, so it reduces my interest on my home loan. But the interest rate you can get on your savings, it's just a joke. It's ludicrous. Not like the times in the past when you get 5% or crazy interest rates if you go further back. Or what about the Pyramid Building Society down in Victoria? So what do you think, everyone? Do you think we'll hit zero rates? Do you think the predictions by the RBA rate indicator are accurate? 84% to decrease to zero. And then, do you think they'll hit to actual negative? We'll have to wait and see on Tuesday. Let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join us on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone. Have a great day. I'll see you next time.